Okay, our next speaker is Gianluca Gaggiotti. He's a senior knowledge manager at Impact Europe, and he will be speaking about impact finance for urban transition. So, Gianluca, the floor is yours. If you want to introduce yourself a bit more and share a presentation, if you have one, you're welcome to do so.
Sure. Thank you very much for inviting me. And yeah, thank you, Anna, and thank you everyone for inviting me today to speak about and introduce you a bit to the world of impact finance. I hope the presentation is going to be complementary to what Francesca and Isabel have presented before. So my name is Gianluca Gaggiotti. I'm a senior knowledge manager at Impact Europe, and I'd like to start a bit presenting what Impact Europe is and stands for. So this is a short table of contents, so I'll try to stay within the time. And yeah, I will first introduce Impact Europe, which is the organization I work for. Then I will briefly introduce you to Impact Finance. So you may notice already that there's a small tiny difference from what was discussed before in the term sustainable finance. So I'll try to, let's say, position it vis-a-vis other types of finance. Then I'd like to dive a bit deeper into a series of cases of impact finance applied in the context of urban regeneration. And finally, I will conclude with some concluding remarks. So happy to receive your questions, let's say, on throughout the presentation. So first of all, what is Impact Europe? So we define ourselves as the Investing for Impact network. We are a community, first of all, of like-minded peers and investors for impact. That's how we define them. We have a wide, let's say, community. We are sort of a broad church. We have more than 300 members spread all over Europe. That includes foundations, financial institutions, and impact funds, so mainly investors and capital providers, but also supporting organizations like incubators and accelerators, for example. We act as standard setters, and we try really to raise the bar when it comes to investing for impact practices and impact measurement and management. So I'll talk more about this, but we really believe that that's a very important practice that all our investors, let's say, lead on. And we also try to provide data about the market and how it grows over time. So I'll share a bit more while presenting impact finance. But yeah, we try to really act as an hub for market sizing. We also have established a relationship with EU institutions, so we really try to have a strategic presence in the European Union when it comes to fostering access to finance and social in the social economy policy sphere. And finally, we also have tried to have this. So Impact Europe, as you may guess by the name, is a European network. So our primary focus is on Europe, but we having also investors in our community that invest globally. We try to also expand our influence through collaborations and partnership with other market builders globally. So very briefly on our theory of change. So we try to enable European-based capital providers to accelerate positive and lasting social and environmental change at scale. So I think through increased resources, collaboration, and expertise in facilitating and enabling policy framework. I think here the keywords are really this focus on acceleration of this positive and social environmental change at scale. So we do so with 4, let's say, strategic objectives. One is to make more capital impact capital. We want more capital providers to join the movement and deploy their capital for impact. We want to make more people impact people. So we also want to and try to inspire people to join the movement. We want to take collective action. We know that there's a lot of silos existing, and we really try to break them to foster partnership and enabling collaborations in the ecosystem. And last but not least, we try to take impact wider and higher. We do so through our market building initiatives in the MENA region, as well as in Eastern Partnership countries. And we also do so by influencing policymakers. So I think I've already talked enough about Impact Europe. So now I'd like to introduce you to what is impact finance. And I'd like to do that presenting you this spectrum. So on the two sides, you can find grant making and traditional investing. And we believe within these two words, there's different, let's say, investment approaches. So following a bit also the order of these presentations that have been done before. So on the right-hand side, you can see that there is responsible investing, which is primarily focused on excluding harmful investment and make investments only in responsible businesses. Then we find sustainable investing. So I won't spend more words on that, as that has been the first presentation about sustainable finance. So I won't go in depth on that. But what we find going a bit more towards the left is impact investing, which is, let's say, defined and identified by these three small boxes that you see below. So first of all, intentionality. So it's investors that have the intention to generate a positive and measurable impact. And they have framed that in their strategy. They have developed an impact thesis and have a theory of change on really the impact they would like to generate through their investment. Then there is this measurability aspect. So they really commit to generate an impact, positive impact that is measurable over time, and that also commit to manage the impact. So all of the information they collect on impact really gets managed to take better informed decisions. And last but not least, there is this additionality element that, as you can see, covers just a part of investing, which is very important because we believe that impact investors should go and generate an impact that wouldn't have been generated otherwise. So it's really important that they focus going where other investors are not going, to really generate an impact that is additional. Then on the left, we have this catalytic grant making, which is a specific type of grant making, which we believe is very important to build viable business model and generates those revenues that also Michael was talking about before. So I'll have a bit better in the definition later, but these are the two, let's say, the impact finance focuses on these two strategies. So the use of grants in a catalytic way and impact investing. So as I said, I'd like to present you a bit how we define catalytic grant making. So it's a strategic approach to the use of grants that is really aimed at support impact ventures addressing social environmental challenges, but that they're not ready for repayable instruments or lack a viable business model. So they get into the play when there is the potential to generate a viable business model, but it's not there yet. And grants are used in a versatile and flexible way to change the trajectory of these early stage ventures, to support them developing viable business models. And they often do so by offering not just the financial support through grants, but also offering assistance that it's very valuable for projects at this stage, and that can take the form of research, capacity building, scalability testing, and so on and so forth, but really aimed at enhancing their scalability potential. And obviously, these grants also come into play as an important source of de-risking because they help, let's say, de-risk these projects and attracts follow-on funding, which is really the aim, let's say, the final aim of these grants. When it comes to impact investing, I've already let's say told you these three elements. So here you can see them stated here. So first of all, we have intentionality, which is this clear ex-ante intention to contribute to solving social environmental problems, in addition to earning a financial return. So also very important that you need to at least target the recuperation of capital in order to be included in the impact investing. It has a focus on measuring the impact that can be social or environmental that is generated. And as I said before, huge focus on the management. So every data, every KPI, impact KPI that social and environmental that is collected needs to inform the strategy of the investor and needs to improve the impact that the investor can generate. And last but not least, it has to flow towards companies whose primary mission is to provide solution to address social and environmental challenges and or benefit otherwise neglected or underserved target groups. So that's a very important element, that capital should flow into these companies whose primary mission is really to solve a specific challenge that can be environmental or social. So that's their primary mission, and finance is seen as a mean to achieve that mission, that impact mission. So I'd like to present you a bit what the impact investing sector looks like. So I can do that in a quantitative way, showing some slides, because we have led, as I mentioned before, act as a market sizing hub, and we've been collaborating with all of these partners to produce some statistics on the European impact investing market. So we don't have anything yet on catalytic making, but we're in collaboration also to produce some stats on that. The stats that I will be showing are part of this accelerating impact report, which is publicly available online, and I'll share the link later on. But it's important to stress that we are now engaging in a new wave of data collection, and in 2024 we will publish an updated version of this report. So stay tuned. This data comes from the report that has been published in 2022. So first of all, to contextualize a bit the size as well, we often say that the size of impact investing is not really reflecting its true impact potential. So the potential stands on the approach and on the innovation that it can produce, and not really in the size. As you can see, it is a smaller portion. So here we have the European, let's say, mainstream investment market that is was estimated to be 17.8 trillion. The ESG/sustainable European was estimated to be 3 trillion, so 17% of the total. And as you can see, the European direct impact investing, meaning flowing directly towards companies and investees, was estimated to be 80 billion. So fairly smaller compared to the sustainable, but we believe it's very impactful, let's say. So the potential of generating transformative impact and fuel, let's say, transforming solutions is really high in that segment. Who are the impact investors and how they operate? So this graph presents a bit of a split, both in terms of asset classes they use. So we're talking about predominantly about unlisted markets, so private instruments, private capital that can get issued through private debt, as you can see, the majority of them. But there's also private equity, real assets, and social outcomes contracting that includes outcome-based mechanisms like social impact bonds or development impact bonds. And as you can see in the graph on the right, we can also observe that the majority, and that's not surprising, of impact investors are venture capital and private equity impact fund managers. But then there's also private financial institutions and some foundations that also start in, let's say, taking a more strategic approach to their grants, and then a bit also to follow what Michael said before, in order to stretch a bit their impact and the limited grants resources they had, they started issuing repayable financial instruments such as private debt and private equity to stretch their impact, let's say. And then a very important element for us, which is this focus on impact measurement and management, especially. So this is an overview of the different, say, frameworks that are adopted that shows that the investors really don't just, the impact investors don't just stop at measuring impact, but they also manage it. And yeah, the most adopted ones are the theory of change, which is a very, let's say, acknowledged tool in the ecosystem to try to present the change that you'd like to do with your investments, and the SDG impact standards, and these are all like very acknowledged initiatives in the ecosystem. So with my time left, I'd like to present you three practical cases of impact investors that have been supporting urban regeneration models. So first of all, I'd like to present the case of Fondazione Cariplo and Fondazione Social Housing Sociale. So it's a case in the Italian context. So back in the end of the 90s, Fondazione Cariplo identified a significant housing gap that emerged from individuals that had annual incomes between 20 and 50K. So there was, let's say, an impact gap because these individuals were ineligible for the public housing, but they couldn't access housing affordable options in the traditional markets. So that is the gap that they've tried to solve, and usually impact finance really operates when there is this gap. So public funding doesn't go there, neither the traditional market. So there is a need, and that was the targeted need. And the role of Fondazione Cariplo was to first of all recognize this need and try to think about solutions. And to develop a solution, it's basically tested and validated a new social housing model that was tested thanks to both the grants and the equity that Fondazione Cariplo provided. So elaborating a bit more on this, what Cariplo did was first providing some catalytic grants. So they funded the initial feasibility studies, the operational costs, and also the strategic partnership grant money. And then they provided, still with grant money, an endowment to create Fondazione Housing Sociale, which was a specific entity that was aimed at building this model. And Fondazione Housing Sociale launched the first fund, social housing fund, that was Abitare Sociale first. And that was back in 2008. And Fondazione Carico provided the first 30 million equity for that fund. And it managed to attract additional 55 million for this first fund. And then with a bit of fast forward, what they managed to do is to build a scalable model that they basically gave to Fondazione, to Cassa Depositi e Prestiti, which is the emotional banks in Italy, that scaled the model. And now by 2009, actually developed a system of 29 housing funds present in all Italy that were somehow following the model Abitare Sociale one. So that is really an example of how catalytic grants can really help scale, create, test, validate, and scale these projects. And yeah, this is just to give you an idea of the scale of the impact that was generated. So over 25,000 families and 8,000 students had access to affordable housing that either they would have had access and they would have over-indebted themselves, or they would have been without those houses. Or in the case of students, maybe they couldn't really go to the university without this housing support. The second case that I'd like to show is again linked to social housing, but it's a case of an impact investor. So here we're not talking about grants, but we're talking about debt instruments. This case comes from the UK, so it's the case of Resonance Limited, which is, as I said, an impact investor focusing on creating positive impact through sustainable and social housing. Their key objective, let's say, is to again focus on the housing markets and to focus on the gaps of the housing markets and focusing on individuals that are at risk of homelessness. And more specifically, they target these three impact areas. So it's actually three: homelessness prevention, support for low-income families that would struggle to find housing, and also social housing development in partnership with charities and housing associations. Obviously, impact investors are not alone; they not operate in markets that are alone. So they really try to foster collaboration, and they have really generated a very significant impact as of now. But just to dive a bit into their investment structure, they operate funds. Here are just two examples, but there are more: the National Homelessness Property Fund and the Real Lettings Property Fund. They invest in residential properties, and then they lease them to housing charities that manage and support the tenants' transition of homelessness. So they have a very important collaborative approach, and their key outcomes can be, let's say, summarized in the housing capacity that they've managed to expand for hundreds of vulnerable people. They've done that leveraging strong collaboration with local governments, charities, and housing associations. And through the innovative financial structuring, they've also managed to scale this model and attract small institutional investors. I think they're very innovative as an impact investor in the UK, and I think their model is very interesting. And last but not least, I'd like also to present the case of an impact investor like Truck that invested in a very interesting urban regeneration project, which is called InFarm. So InFarms is one of the leaders in the urban vertical farming. So they really try to develop climate resilient and modular and farming solutions. And Light Rocks entered as an investor in the Series D funding round, and their role was really to support them to expand, because there was a proven business model, but it was at a small scale, so their funding was really important to scale these solutions. The technology of InFarms is really this vertical farming in urban areas that can decrease the use of water and transform the spaces into high output farms. Thanks to also the support of Lightrock, they managed to really improve their reach globally, and they also, thanks to Lightrock's backing, try to develop more their AI-powered farm management system. So I'm afraid I'm going a bit over time, so I'm almost done. I just have the concluding remark slide, but Anna, tell me if I should stop now, and I'll drop the last slide. You're muted, Anna, I cannot hear you.
You can do the concluding remarks and we can go to questions. Everyone, you can write your questions.
Okay. So I feel I've thrown a lot of content, so I just wanted to conclude by highlighting some key aspects of my presentation. So first of all, the role that impact finance can play in urban regeneration is really to play this transformative role in urban transition projects by providing the flexible funding that solutions require, especially at the early stage, to become financially viable at a later stage. The cases that I've presented obviously show the importance of partnership. They cannot do it alone, but they're the perfect partner to work with, especially at early stage, to develop new solutions and also to ensure that capital is deployed effectively. They can be very important to test, validate, and scale solutions across borders once the models are being validated. And this is more of a call for action that the continued mobilization of impact capital and the expansion of partnership are very essential in urban transitions, to drive urban transitions, and all investors are encouraged to take bold steps towards aligning their financial returns with both impact and environmental outcomes. So I think slides will be shared. I have included some additional links, and these are my contacts in case you'd like to reach out.
Thank you, Gianluca. Now it's time for questions, Paola.
Yes, we have a couple of questions. The first one is, how much do you think the impact investment market will grow the coming years?
That's a very good question. So that's something that we are trying to answer with our market sizing report. So again, stay tuned, and as the new version will be launched at our Impact Week in Bilbao at the end of November. And we are trying to provide some trends there. Looking a bit at the last years, what I can already tell you is that in the last report, we have observed a yearly growth rate of 26%, which is quite significant. And that's both caused by the fact that a lot of impact investors are, let's say, growing their total assets under management because they're launching new funds. And then there's also new fund managers that joined the ecosystem. They launch new impact investing funds, and part of the growth is is caused by that. So I think this rate of growth that we have observed in the last study is going to be confirmed in our next one. We believe that impact investing is really in a phase of growth, of rapid growth. So I think I cannot foresee in the last 10 years how it will grow, but I think in the next 5 to 7 years it will keep growing at this pace because more and more also actors and investors from the sustainable finance ecosystem, they're really understanding the value of having or devoting part of their total assets to impact investing.
Okay, thank you. And then a second question, is the impact investment suitable only for real estate investments, building or houses, or can it also contribute to the development of urban infrastructures?
We believe that they can play a role in both. So as I've shown in the social housing segment, we have more example, let's say, of impact investing. But we believe that and there are cases of also impact investors supporting in infrastructure development. They need to do so, especially by providing first loss capital or guarantees. We've seen that the use of grants can be very valuable there as a sort of like complementary source compared to public funding, to provide this first loss capital that can attract private funding. And but we also must admit that impact investing so far has been leveraged more for let's say less capex intensive projects, so more like solutions projects or enterprises that are developing innovative solutions without requiring a lot of initial capex investment. So we must let's admit that so far impact investing have been adopted more to support those types of companies that are more, let's say, similar to cases like the one of Infarm that I mentioned before, that are trying to build startups, building new solutions, leveraging technology or other tools.
Thank you. No more questions. Thank you.
Okay.
Great, thank you, Gianluca. Then I will introduce the next speaker. So our next speaker is Francesca Passeri. She's a member at the Areaeuropa Cooperative, and she will be speaking about innovative financial schemes in support of urban transition, crowdfunding, and match funding examples. We are very happy to have you here, Francesca. If you have a presentation to share, please do so, and also introduce yourself if you want to add something else.
Thank you, Anna. Thank you for having me.
Yeah.
Say again?
The floor is yours.
Okay, wonderful. I grabbed the floor for myself, so thanks. It's very good to be here. It's always very good to hear. I was listening to Gianluca presenting the range of interesting initiatives that they always carry out. So we've been knowing each other for a long time, and we also developed something together at some point. So very good to be here. Thank you for having me. I am going to go directly to my presentation. I just kindly ask you to let me know if you can actually see the slides, just as a confirmation.
Yes.
Wonderful. So I'll spend a couple of minutes to maybe introduce Areaeuropa and myself. We're a cooperative of professionals. We're based in Bologna, and we try through our work to really make a contribution to all those potential solution to the challenges that we are facing today. So when it comes to, ecological needs, digital transition, cultural inclusion, or merging of cultures, that is basically our core focus. We're a very diverse team, and actually my core area of focus is crowdfunding. I have been working for the European Crowdfunding Network from 2015 until the end of last year. I was deputy director for them, and then I relocated to Bologna, but crowdfunding still holds a special place in my heart. So this is what I am continuing doing in Areaeuropa as well. We, of course, focus mostly on supporting in the development and running European projects. That is one of our core businesses, but we also do consulting services, such as technical assistance, which is one of the key areas that crowdfunding is interested from. And we develop training courses. We have this range of activities that we carry out jointly with our partners, and that we think are a good contribution to also develop capacity in our clients and in people that interact with us. Enough about Areaeuropa, because I promised Paola I was going to be short on this, so I hope I have complied. Let's dive deep into crowdfunding. So crowdfunding is another of the financial options that has been made available since 2013 on the financial markets. Since last year, it has a fully operational European regulation. And so it is time that we start looking at it as a viable solution for some of those investment gaps, market gaps, especially in those areas and in those projects which are very difficult to look at and finance if you look at it through a traditional investment market lens. Just a short recap, because I'm not sure that everybody is familiar with the term crowdfunding. I'm sure most of the people in the room might have seen a crowdfunding campaign run by some friend or some bands to organize some festivals. But actually, crowdfunding has also financial mechanisms, and we will see it has different models in itself. This is just the overall overarching definition that applies to crowdfunding as a whole, regardless of the specific models. So we have an instrument that is basically helping individual projects in raising funds from a large crowd, so a large number of individuals that each contribute a smaller amount of money and that all together contribute to the achievement of the overall financing need. This is usually done via the internet. So there are specific websites with dedicated authorizations that are actually in charge of managing, structuring the deal, tracking the cash flow and the financial transaction, and ensuring that all the money goes actually to those that have requested it after a secure due diligence has been run. So this is the role of the crowdfunding platforms. This is clearly a revolutionary approach if compared to other financial mechanisms that exist on the market. It shifts the focus and the burden of the entire investment from one specific entity, can be a fund, can be a bank, to a large crowd of potentially interested individuals that do not have to fulfill the entire investment need. They can each invest or contribute with the limited amount that is at their availability at the moment. It's going to be the power of the aggregate crowd that will make up for the full financial need. So, of course, this is clearly a different scheme, and it has been a scheme that has been very interesting for public authorities and private authorities alike. In this framework, what has been emerging and what my clear field of expertise is in the combination between public funds and crowdfunding resources, which, this type of combination falls under the match funding definition, for which these two types of resources, so private and public, are combined together in order to finance one specific initiative or a single initiative. So we have a mix of different sources of funding that contribute to the achievement of a single investment need and potentially to the development of specific projects. So we have different ways in which crowdfunding can actually be declined. So we have 4 different core crowdfunding models. We have two non-financial crowdfunding models, which do not imply the development of a financial instrument, and these are the donation and reward crowdfunding types. These are the most common. These are those used for, a garage band that wants to sell and produce a new album, and so they put a reward out. It's also used by some not-for-profit associations to raise funds for specific projects or initiatives that they have, but they are not necessarily, they're the most well-known, but they are not the only types of crowdfunding that there are available on the market. The other two types, lending and equity crowdfunding, are those that I think would be more interesting for the idea and the case studies that I will present to you in a short time. The lending crowdfunding model is basically, it replicates the structure of a traditional loan model, but instead of having one single lender that takes on the burden of the overall loan, we have the loan broken down into smaller lent amount that come from different lenders. So a crowd of lenders contributes to the fulfilling of the overall loan amount. And still there is a credit contract in place. There is a fixed interest rate that will be repaid at the end of the contract, a fixed time limit by which the capital has to be remunerated and returned with the addition of the interest rate. The equity model is also very interesting. It's a financial instrument as well, and it basically foresees the acquisition of shares into one specific entity. It's usually a company that sells the shares. Those that decide to buy the shares become individual investors, and those shares are usually redirected towards, or that amount of money is usually redirected towards a specific development line or specific project or a specific initiative. And the outlook for the remuneration of the capital is actually aligned with a potential exit strategy. So basically crowdfunding, what it does, it puts every individual in the position of a potential investor or a potential loan. It doesn't change the nature of the financial instrument. It changes the players that are involved in the financial instrument. And of course, this is absolutely interesting when we think of initiatives that look at involving citizens or that have an impact on citizens, because through lending and equity crowdfunding, we can have and make an impact not only in tangible terms, so the outcome of the initiative that will be implemented, but we can also incentivize them and correspond them with a financial return. And this is even more interesting when we look at all the advantages that crowdfunding can have, looking at, for example, the economic side. So it is an instrument that provides easier access to finance for those so-called unbankable subjects or projects. It foresees a shorter time between raising funds and receiving them on the bank account, so making them available to use. And it provides a very significant risk dilution effect, because as I said in the beginning, there is not one single entity that has to take on the burden of the entire investment, which is also connected to the entire risk. It is spread out across a number of individuals. The company or entity that is raising the funds will still receive the entire amount. It's just that it will be less risky and therefore more appealing to the range of individuals and actually institutional investors that do participate in the crowdfunding campaign. There are also a range of non-economic benefits, among which I want to underline the fact that there is an increased sense of ownership and endorsement from the local community in which the crowdfunding campaign and project will then be deployed. This is especially of interest for those public authorities that look to develop a new partnership, a new paradigm of interaction with their citizens, and that want to experiment in situations where there is a real public budget constraint. So not enough public resources are allocated, and there is a need to raise private finance. And at the same time, we want the citizens to be involved. So this is where crowdfunding positions itself, right at the intersection of these dimensions. This is just an overview, and I'm not going to go through all of these options. This is just an overview to basically visualize for you the range of options that the combination between public authorities and public funds and crowdfunding resources can be applied. So we have different times and different commitments and different efforts according to which we can see public resources giving a boost, bridging a gap, being a sort of prize for those that raise the funds through crowdfunding. And then we see the white part, which is where crowdfunding comes in. So how much crowdfunding makes of the overall budget. These are different timings, different mechanisms, different scheme. And in each of these specific boxes, you will find also what it does, like what each scheme produces in terms of benefits and in terms of most recurring uses. This is another example that we further developed together with the Fee Compass arm of the European Commission and the European Investment Bank. They were very interested in finding out and making available to more managing authorities, so public authorities, the options and the opportunities that crowdfunding could actually provide. And so we tried to develop this financial scheme together with their EIB financial experts of how could it look for an integration between ESF resources and crowdfunding platforms. So we have two models that can be deployed. One model where funds are basically channeled from a financial intermediary to the crowdfunding platform and then redistributed to the project. So we have a match funding in the sense of simultaneous match funding. So private resources and public resources combined together, delivered to the crowdfunding platform, and then pushed down into the specific initiatives. And then we have the second scheme for which projects run their crowdfunding campaign independently of the support from public funds, but we then have public funds coming into the scheme for an additional boost to those projects that have been successful in raising the crowdfunding campaign. So there is like a fast track between raising your funds in crowdfunding and then having access to further finance through a dedicated financial instrument. These are both clearly adaptable to financial and non-financial support. So grants can be structured this way, but it's clearly more interesting and more rewarding to structure lending and investment operation in this sense, because the complexity of the scheme is high. So we also want the significance of the funded initiative to be as relevant. And this is, of course, just one picture of all the things that we have explored and all the references. There is a full study, and I have a list of resources at the end of this presentation. So this is just to point out that already in 2019 or 2020, if I'm not wrong, there was an interest from the European institutions, and not just to use it for their own benefit, but to promote this vis-a-vis public authorities at local level. We then further developed an application case based on an existing Horizon 2020 project in Emilia-Romagna. So together with the coordinator at the time was AES, and together with Arter and the Climate Kick. So these are entities, AES and Arter, that move in Emilia-Romagna, so they know the territory very well, and financed by the Climate Kick. We tried to develop an ex-ante assessment study, thinking how could crowdfunding support deep retrofit intervention in those social housing buildings where we have a mixed ownership. So we have private owners and some other ownership, some other apartments owned by a public authority. So for example, the municipality or the region. In those buildings, the identified issue was, if we need to run a deep retrofit intervention, there is not enough private finance from the private owners that live in that building, because we're still talking about fragile situations. So not so much ready to invest a certain amount of money to reduce their energy consumption because they don't have that availability, that liquidity. And so how can crowdfunding be integrated into the scheme so that we can externalize the burden of investment from the private owners, shift it into external investors, provide actually the deep retrofit intervention, and then remunerate the investor? This was the assumption. The outcomes that we have basically come to a conclusion of are that crowdfunding does have the potential to partially de-risk investments in this retrofitting intervention. It can actually be combined with public and private resources with a number of positive effects. And it does externalize the financial burden. So it shifts the focus from the owners of the apartments onto investors. And then how, when we came to the question, how do we remunerate these investors that have assumed the burden, we actually have identified also that there is a delta, so a difference between the bills before the retrofitting intervention and the cost of the bills after the retrofitting intervention. So we actually came to the conclusion that by identifying a sustainable percentage of those savings in the difference between the pre-intervention cost and the post-intervention cost, we can still guarantee savings to the owners of the apartments, the private owners, and remuneration to the investors that have assumed the risk, if this would go on for a number of years until we had remunerated the entire capital and potentially the interest or the profit that they were planning on making. So this is an ex-ante assessment study, and we are, this is a call to action for everyone. We are also looking to pilot this if there is someone that is interested in actually going this direction. I will close with just 2 case studies. Anna, am I on time?
You're on time, just a few minutes.
Perfect. So the first case study that I have that I want to present to you is actually of a photovoltaic plant in a small municipality in Campania, in Italy. This is going to be financed through, it's still open, it's going to be financed through lending operations, equity crowdfunding operation, because there is a special purpose vehicle involved. So a new legal entity has been created just to collect the investment and then place the money on the specific intervention. The interesting thing for this project is that actually the company that is raising funds and that is promoting the campaign, so Solar Papilio, they're looking to refinance new pilots of the same type through the funds collected and the profits generated in other parts of Italy. So it's already a replicable scheme. And here I have just shown you, I wanted to show you more or less the financial indications. So what is the base rate, how long the investment lasts, how many investors are there, what are the investment ranges. So you can start from a minimum of €100. And basically, this is what you will find in a serious crowdfunding platform. Let's put it this way. So this is the first case study. The second case study is from a private entity, which, however, has managed to basically refurbish and reactivate an abandoned building of public property. So we have this gym that has acquired or has been authorized to use a public space that was abandoned. They are planning to run very deep interventions in terms of energy efficiency that will lead to very high performance in terms of energy efficiency. And they are actually requesting a minimum financing of around €2,000. This is basically this different scheme, but it shows how crowdfunding can be a very flexible instrument. In here, you have the same overview. So base rate, duration, number of investors. And I just wanted to kind of leave both examples here because it's interesting to explore how much it can be done. Yes, Anna, I have seen a hand.
Yeah, thank you, Francesca. I would love if you could share the links to those projects on the
And
chat.
I would love to do
others
so as
can,
well, because
also look at
I
it
actually
either
have...
now or later.
Look,
Now it's
at the
time
end,
for questions, Paola.
Yes, there are a couple of questions I would like to pose to Francesca. Thank you very much for your presentation. It was very interesting. So the question are, what types of projects are best suited for crowdfunding? There are types of projects which better works.
Yeah, definitely. So there are some projects that have, so the first characteristics is a certain level of maturity in terms of knowing what we want to achieve, where, for example, the intervention or the activity is going to be realized, and the agreement of the stakeholders that have to be involved, or the parties that cannot be not involved. So, for example, if we want to run an intervention on a public building, we have to make sure that we have the authorization and the green light from the public authority. So these are the prerequisites. And then, of course, the financial structure of how the capital is and the investment is going to be repaid. So these are the clear elements that need to be present and on which you can work on and further fine-tune and develop the idea.
Okay, thank you. Then I see that you have just provided the information for the online platform, so thank you. Another question is, do you think local authorities are well aware of crowdfunding models?
I think they're not enough aware. So they are at some point aware that there is something like this out there in the universe, but they haven't yet taken the time to really look at it in detail, understand it, and see how replicable and flexible and useful it can be for them. So my suggestion would be, they know, they have heard the sound, they know that there are a lot of peers, like municipality of Milan, in northern Spain, the Basque Country, the investment bank in Berlin, that have done this type of synergies. And I think a bridge in Amsterdam was entirely rebuilt through crowdfunding. They just haven't taken the time to look at it sufficiently in detail.
Okay, thank you. No more questions. Thank you.
Thank you very much.
All right, then I think it's time for closing this workshop. But Paola, just before we finish, would you like to say some concluding remarks?
Yes, I would like just to share with you my screen with this.
You can put it in presentation mode.
Yes, I'm trying to. Okay, here it is, the composition of the audience we had today. I think that this is an important information to understand which type of audience we had. You see, we have the most of the people who joined today was researcher, but also project manager. And then we have couple of creative, 3, fundraiser 9, and cities authorities and consultants 9 and 8. So the graph, the charts and the growths that Michela created for us, Michela Piva created for us, provide us a clear idea of people who are interested in this type of communication. So we will continue probably with this type of activity. Now I skip to this last slide. We have created, as we have already said, this workshop in the framework of DOT and the public officer and practitioner community. We need to understand and we would like to have feedback from you in terms of you think that the topic that we proposed was interesting, was clearly addressed, and if you would like to share with us contents for the future workshop that will come in 2025. So I have anything more to say?
Yeah, thank you, Paola. There will be a survey actually that comes after you close this Zoom session, so please answer it. And just so you know, there is still the DUT call is still open for applications, so it will be good that you go into your website and check that out. We will upload this video to YouTube, and we will share it with everyone who has registered, as you have seen in the statistics and the interest that there is. Do you have any other thing to add before we close?
No, I just thank the participants and the keynote speaker. I hope we have been able to create this interesting discussion. We have presented different type of funding. This was our aim, to just let you know some more on this type of approach. And then, of course, if you want to provide us more comments, or you would like to receive more information, etc., you just have to contact me, Silvia, or Michela, or the board for more information on the partnership itself, the call, and whatever. So thank you very much for being today with us.